Let's see if we get a pullback on crude. Excuse me. All right, the crude pit opened actually a minute ago. We got this small surge. Higher time frame resistance on crude at 48.39, and that's exactly where it went to the tick. Actually went to 48.40, and it's being turned down. Occasionally, volume profile will not give us, excuse me, a low volume node, both below and above the point of control. There is no zone of rejection below the point of control. Point of control is so far skewed down into the value area low. That's our support right here. Very little price movement right now. E-mini has really hit it to the downside, but it is sitting close to support. Crude has moved up, but it's sitting right below resistance. Now crude is moving back to support. A little bit of room to the upside for a continuation long trade. If we get a down close. Order flow is red. Crude is overbought. MA diff is 24. We want that MA diff on an 8 range chart to be 18 or less. Yesterday, the markets really recovered off of a real bad opening. And people bought right into the close. We have no short trade on the E-mini into dual support, value area low, and point of control. We have no continuation long trade on crude. Crude's very tight to upside resistance, and it's overbought. Hopefully when the New York Stock Exchange opens, we'll get some nice movement. Bonds are heading up nicely and are setting up for a potential transition zone. The 6C is choppier. If we can up close on crude, we can take the down close. We need crude to up into resistance. Supports at 48.17. So we get an up close. We have nice room on the down close. I'm going to take that back. Maybe a little tight. We'll see if we get it. Because we have a potential setup. Our bonds are heading up. And when they do, the big investors are almost always pulling their money out of the E-mini. And that is why 2 out of 3 quant lines are red. That information is reflected in those lines. The dashboard is signaling on bonds. It's telling us we have a potential trade. We don't have one, but we do have the potential for a trade. 14 minutes before the NYSE opens. I don't think we're going to get much movement until then. A crude sitting right on support. So we get a pullback on crude. Looking for an up close. There's news on the ticker that the Libyan military closed down all their oil pipelines. It could be why oil is up. All right, let's running get some movement. Let's see if we can get the up close on crude. Crude does crude doesn't want to pull back. It's trying. Movement on, little movement on the E-mini, and very, very low volume. 1 minute. Watch the E-mini for a breakdown through support. I make diff is 13, so it's tradable. We're going to look for an up close on crude and a continuation or a reversal to the downside on crude. All right, the NYSE's open. That's bouncing off support. You have 4 contracts dialed into the E-mini, so I'm a little bit hoarse. 10,000 contracts are crossing, very, very high volume. No short trade into support. Watch crude. E-mini is bouncing off support. Trade into support here would have given us a loser. You need a retracement on the E-mini to get into it. We're going to sell it. We're going to sell a down close on crude. That's 2 contracts. The entry is 48.16. It's a counter trend trade. We'll keep our eye on it just in case it fires through. Now we're going to cancel it. Now, if we get a pullback to support on the E-mini, we have a reversal long trade with the green quant. Need a B candle. got 4 contracts on E-mini dialed in, 2 contracts on crude. There's a high volume movement right now on the E-mini. We're gonna take it with 4 contracts. Crude volume is okay. And crude movement is choppy. It bounced right off support. These rejection zones are so powerful. And when the point of control and the value area lower confluent, also another really strong area of support, turn the E-mini. We traded into it, we'd have had a loser. We didn't have the setup to take a counter trend, but the E-mini is retracing. Our anticipation is still for the E-mini to roll over to the downside. We're below the 50. Dow opened up 6, S&P opened up 1.5, and the Nasdaq opened up 6. Opened up 6 as well. There's no trade setups. No background bias on the E-mini, and all the time frames, all the directions on the higher time frames are all out of line. I really like them to be in line. When crude is bracketed like this, by rejection zones above and below, resistance and support, you just have to stand off crude. I'm sorry. We have to wait for, we really want to get a retracement on crude back to the 50. We leave this overbought condition, but there's really no setup we can take. We're trading right into support or resistance in either direction. No trade on crude. I'm just sitting right on top of support. Here's the E-mini with just market profile and order flow. So the order flow changed just one candle too late to get into this long trade. It's reversal. Still red. The crude's trying to break support, but it's having trouble. All right, let's see what the E-mini is going to do here. This was support. It pushed right through. Let's hit support again. I have triple quants. I'm just missing an alignment for getting an alignment on a trade. This would have been a nice reversal off the top, but we were trading right into strong support at the time of the trade. Can't recreate it exactly, but we had major support right into the trade, which it broke. We have no continuation short here into a huge amount of support. No long. We're being plagued here with support and resistance zones. We'll see if the E-mini breaks support. Okay, let's look for a pullback now on the E-mini. We get a B candle to the upside. We've got a trade. Huge volume on the ES now. Need a pullback to support. The make diff is 12. We're just marginally oversold. But we'll take the trade. We need an up close. We never chase a trade. We need an up close and then a continuation short. All right, we're trying to get the B. Those are all counter trend traders in that B. Calling a bottom. That is not where we want to be. Let's see if they can do it for us. The market's rolling over. Everything's in the red. Dow minus 20, S&P minus 3, NASDAQ minus 9. Still look for the up close on the E-mini. All right, we're selling a down close on the E-mini. Let me close it. We're going to go to 2 contracts. I'm selling a down close. 2 contracts. Hold. Excuse me. Take this out. Here we go. 2 contracts. The trigger's 33. So the trigger's 34. Entry 33.75. I'm going to push through support if the trade matures. All right, trade's canceled. Now we have no trade. Price bounced right off support. We have no continuation. All right, we're going to take a counter trend trade on the E-mini. We're going to buy an up close. We're a little bit tight to upside resistance. The trigger's going to be 36.50. The entry's 36.25. All right. I canceled automatically. No trade now on the E-mini. Let's see if we get a down close on the E-mini. There we go. Major quants red. Let's see if we can pull it down. Let's get the down close. Now let's watch the up close. We're going to buy an up close on the E-mini. Oh, God, it went through it. Close the trade. I hit it too late. There it goes. God, slow reflexes. Our target would have been 1 point. Would have taken the whole trade down at 2337. That was our first entry. The trade beat me to the button. Now we have no trade yet on the E-mini, nothing. Finally, we got to move up, pull back to support, and the continuation. Order flow, green. There was our reversal trade. Now, crude is just a mess. Just don't have a trade on crude. You have no trade on the E-mini. You do not have a short trade here. Look how this trade's maturing. We would have taken it off at upside resistance. We can see how powerful the reversal and order flow was at the appropriate moment. We had a structural setup. We can't take a long trade until the 15's above the 50. This is a huge volume move. 12,000 contracts are crossing 14,000. See the volume hammers way up. Now, if we get a pullback here, we may take a long trade. Listen, we had the entry. The 15's just about crossing the 50 now on the E-mini. And all the talking heads are predicting the E-mini will roll over, and it just won't do it. All these indices are only 3% off their high. They never really retraced much. And every time they pull back a little bit, buyers just come running in. Now we need to pull back to support to take a trade on the E-mini. We called this reversal here. And would have been in it by better reflexes. We can't claim any profit on it. Now everything's in the green. Dow's up 34, S&P is up almost 4, the Nasdaq's up 5. Look at the size of this move. This is what happens when you get a clean break above these rejection zones. Price tends to run. We sold an option position this morning for 20% profit. Sientra. Bought it for 15 cents and sold it for 20. Actually made 33%. No continuation long here. It makes breast implants. And I saw the information crossing the ticker that became associated with cancer. What puts on it, got the puts. And then the day after the news, Sientra collapsed. A small cap, so it didn't collapse too much. Enough to give us 33%. No continuation long on the E-mini. Or 7 ticks off support on the E-mini. We have no trade. Candle's too far off support on the ES to take the trade. Now watch the E-mini. We're going to sell a down close on the E-mini. The trigger's 40.75, the entry's 41. It's a reversal. These were always higher risk trades. We've lost the major quant. We've got the major quant back. Now it's gone. We're going to stay with the trade. Triggers 40.75, entries 41. Major quant's gone. All right, we're in. Let's take it at 3. We're out at 3. Let's see, we go to 4. Come on. Come on. Move this stop to break even. Unless we hit that 4th target, we're not going to make a 4th tick. We're not going to make much. There we go. Yes. Here we go. One more tick. Yes, there's our 2nd target. Here we go. Close the trade. We're out. Right into support. And again, excuse me that I'm getting hoarse, but I'm getting a little bit of a cold. Now, we caught that reversal real nice. This is how far the trade's gone so far. I would anticipate a bounce here, which would have taken us out of the trade. So we make $237.50 on the trade. Now, if we had caught this trade to the upside and had faster reflexes, we'd be done for the day. We'd be out with $500 right now. But we're still in the game. Because of my rheumatoid arthritis. So I'm just kidding, I don't have it, but I was just, the trade just skipped right past me. So far, it's gone 9 ticks, and it may go lower, but we're not going to take the risk since we're trading in that zone. So we are getting a bounce. This would have taken us out of the trade. By closing, we optimized our profit. All we need is one more really nice entry. And the C continuation short we are not going to take. Background bias tells us we have not broken all support to the downside. And we have major support at 238.25. So pretty tight to this trade. Oh, now we can take it. We're going to dial back to 2 contracts on the E-mini. And let's watch the C down close. Here's support. All right, sell it down close. The trigger's 39, the entry's 39.25. We're in and filled. There's our first target. Here we go. Keep going. break the candle, close the trade at support. We're out. We're done for the day. Our price target is between $200 and $400 per day. We hit it, and we're not going to keep ourselves at risk. We took the trade off right at support of the 50, and we're done. Maximum excursion 1.75. That was on 2 contracts. Now, trade may go lower, and it is breaking lower. That's okay. This is where you should take profit at major support on a short trade. We can watch it, but we banked on that trade. These are all algorithmic programs. Okay, we're not going to keep ourselves at risk when we're up 350 on 2 trades. I see the E-mini is going lower, but that's okay. We exited at the appropriate spot. Here we go. We made 112.50 on that trade. We just do this for spreadsheet purposes, which is the maximum excursion, which is what we put in. You see, it doesn't change the net equity that we take in the room. It turned out to be a much bigger trade, but 3.5 points. So it's 14 ticks. We have no continuation short. And anyway, we're done. 9 ticks and 14 ticks. Maximum excursion. We made 112.50. And we're on our way to our $1,000. And we're on our way to our $1,000 week. Now, if I don't want to keep saying if, but if we would have gotten this long trade, it was a perfect entry. Order flow shifted in our direction. I called it late. I don't know how much of the trade we would have gotten. I know I would have taken it off at resistance right here at the 50. The whole trade went 6.5 points. We would have not taken this trade 6.5. We would have taken it, I'll take this off because we already scaled it. We would have taken it off at upside resistance right here. Would have gotten a nice chunk of it at least. Just didn't call it fast enough. So these are our 2 trades for today. 2 contracts, 112.50. 4 contracts, 237.50. Here's our summary, 350. Both short trades. We have no transition zone trades, and we have no algorithmic trades. Now, what I'm going to do is I'm going to check it. Yesterday, there were a couple of people that asked questions, and then they got a little bit impatient because I didn't answer them. But I just want everyone to know, I just don't look into the room until we finish trading, and then I do. So I'm going to take a look. We really had a stellar day. We caught 2 counter trend trades perfectly. And we really took them off at the appropriate time. We didn't get the maximum excursion, but you rarely do. We could have had a huge bounce here and taken us right out and cost us 5 ticks on the bounce. can never anticipate that we're going to break the 50. So let me see. Everybody in the room should have gotten these trades. Let me see if there are any questions. Tomorrow we're going to have our didactic, and it's going to be a really, really nice session. I'm working on the presentation and the material that we're going to cover. And what I'm going to do is I'm going to show you how to build a trading system. And I'm going to show you the methodology. I'm going to show you the math. And I'm going to show you some stuff, some really cool stuff that nobody in the trading room, even if they for a couple of years, has seen before. And before I answer questions, I'm going to show you something. I'm going to show you something really interesting. And I'll show it to you right here on the E-mini. So we finished early. I have time to do this. You know, we have a lot of indicators that we really felt were going to be incredibly important in our trading. That after 2 years of market replay testing, and then we still check them out in a live market and look at whether or not they have predictive value in assessing the entry. And then they fail. And I'm going to show you an indicator that is really, it's an amazing indicator that just never worked. We have a whole ton of these, and I hope I still have it. There's usually, a lot of times we just have limits. Now my Ninja Trader is getting a little twitchy and it's going in and out, but let me see if I can find it. Here it is. We never took it out of beta testing. It's called the AA test RL momentum. Let me move it in. I don't think I did. I just hit OK. I'm going to show you exactly how the indicator works. And I really thought that it was going to have nice predictive value. Let me move it in now. So even if we got another great setup, I would not take it. Would not risk $350 on 2 trades. You can see why the small drawdown we took yesterday was so important. That it was small. Now it's in. We started with a large drawdown, and we broke back on it. All right, here's the indicator, right here. And what it is it's a real unique assessment of momentum. And what it is it's based on Heikin-Ashi assessment. What we did is we split the formula for a Heikin-Ashi calculation off the Heikin-Ashi bars. Heikin-Ashi obliterates market structure and price action. And you can see that those are the 2 most important independent variables in taking a trade. This trade was really based on market structure. And tomorrow I'm going to show you why this was a low-risk trade. I don't want to go into the didactic this morning. 1, because I'm losing my voice, and 2, it's a long talk, and we'll do it tomorrow afternoon. But this was a very, very low-risk reversal based on market structure. This was our perfect continuation short based on market structure, not indicator analysis. And this indicator was the multi-time frame. It was not multi-time frame assessment. It was a one-time frame assessment using a modified Heikin-Ashi formula for momentum. See, there's no input for any higher time frames on this. It only does the assessment on one time frame. And I really thought this was going to have tremendous predictive value, but it doesn't at the turns. You look up here at this candle, momentum is long. The continuation, you're going to get momentum. You see, if you look at the histogram, downward momentum has diminished. If you look here at this turn, momentum is still to the downside, and it only moves to the upside here. And maybe what we're missing here is multi-time frame assessment, but we already did it here in this first line. This is the multi-time frame assessment of momentum, and it's much, much more accurate than this assessment. But I thought using a modified Heikin-Ashi formula, we would really come up with a one-time frame assessment of market that really increased the precision of our entries, and it doesn't. Now, if anybody wants this indicator, they're welcome to it. We'll give it to them for free. But I can tell you that it will not help you trading entries, because it doesn't call turns, and sometimes it confounds the trade more than it helps the trade. So it just shows that even when you feel like you have the math with you, if you don't do 2 years of market replay testing, and then you don't just check it out in a live market as well. I mean, I think they're complementary. The 2 years of market replay testing is really critical, because we have a software program that tells you the position of this trade on an entry based on everything else to determine if this is an additional independent variable. And it just was not. It didn't call the trades. It didn't help us get in. And if you see on this long entry here, it did tell us momentum had really waned. But on this candle, we've got up momentum. And believe me, this was a short candle all the way. So it just doesn't help us. So let me take it out. And I'm telling you, this is an indicator that a lot of other platforms would die for. It just doesn't work. And I have a whole bunch of them. I'm not going to show you any more. Somebody asked me yesterday about the VWAP. But we have a VWAP. But when we added it in, it also did not increase the precision of our trading entries. So we took it out. We have a ton of indicators like that. So let me see if there are any questions. I'll just quickly show you crude, which gave us nothing. I mean, since 7:30 this morning, crude has been trading sideways and always bracketed by support and resistance. Just nothing to trade. And these are our two other transition zone systems, transition zone markets. Here's bonds. We didn't even get a transition zone, just dark pink or green. So there's just no chance for a trade, and also no chance for an algorithmic entry. Bonds have been trading really poorly. And the 6E, very, very poorly. 6E volume is terrible, 96,000 contracts. 6E should be at 250,000 contracts. I just don't know where volume has gone on the 6E. Yesterday, the 6E had much better volume. I just want to check one thing on the 6E. I'm going to do it later. I want to look at the September contract. I don't think September is the operative contract, but we'll check it. This is terrible volume at 100,000 contracts, but I think we're trading the front month. So let me see if there are any questions. Frank, I'll show you. It's real simple. Frank, the engulfing candle is the C candle. And the importance of the color is the B candle. Now, if you look at the indicator, and I'll just talk a little bit about the engulfing candle. So it is a really important candle. Here's the ABC. Now, you can change the B candle, and the reason we put the alert on the B is and I have the audible alert turned off. But if you want to have the audible alert turned on, you can. So every time there's a B, you're going to get a beep. Because the B tells you that there's a potential C. So you want to take notice of the trade, not on the formation of the C, but the close of the B. And I just decided to color my B candle magenta. Now, if the C doesn't mature, then this whole configuration disappears, because then there's no ABC configuration. But while it's in motion, you have the A and the B, and it's not a repainting. It's just the fact that there is no ABC configuration. So you can see this one completed successfully, and even if the C candle did not move down as we anticipated it would stay. And this is what the C tells us. So I have the B candle magenta just because I want it that way. You can make it any color you like, or you can make it transparent, which will simply make it the same color as all the other candles. And then if you want, you can create an audible alert. Where's the alert here? Sound. See, I have to false. And I have it on wave file 2, which I just think is a beep, I believe. So you get a beep anytime you get a formation of a B. And what it tells you is that all these traders, so tomorrow I'm going to define a trend, but I'll just on the peak, any 2 candles in a row of the same color define a trend. And once these 2 down candles close, once that second down candle closed, correct, Pervez. What we would do, I move my NDTs off, and you know what? Ninja Trader closed them, but I would hit sell a down close. Just hit the button, because I want to take this C short, and we did take it short. Now this candle is an engulfing candle. The entry candle that we took, that's another reason why I took it. There is no wick. I don't believe there is. I think it's 5 ticks of selling pressure. Let me move this off. There may be 1 tick, but this was 4 ticks of selling pressure at least. And you can see that our entry candle is an engulfer. That's why you have to pay attention to market structure. It tells us there's a lot of selling conviction here. And the C candle is the most powerful entry we have, and we really want to enter on one of 2 configurations, either a C candle or what we call as a dark cloud cover. And this is I'm going to go over much more detail tomorrow. A dark cloud cover on a short is where at least this candle penetrates at least 1/2 of the candle body of the previous candle. It's a weaker entry, but it's still sufficient to anticipate a winner. The C is the best. If it's not a C, it's an engulfer. And what the C is a special engulfer because it tells you that there's a continuation trade. Here, we didn't have a downtrend yet. We didn't have 2 red candles in a row, or 2, in this case, orange, because I just called them orange. But I'll show you tomorrow why this was a terrific short trade and why it works so well. The C candle, these are all traders calling a bottom in this defined downtrend of 2 red candles or orange candles in a row. They're saying the market's not going down anymore, we're going to buy up. And that's not a bad thing to do here because our overall trend is up, but we're taking a counter trend trade. And we really, this is our perfect counter trend setup. And again, I'm going to show you tomorrow why this was such a low-risk trade and why it was so successful. We got 3 really low-risk trades in a row. This entry right here was an engulfer. It wasn't a C, but you can see it engulfed the previous candle. And I wish I would have gotten this trade. But, you know, you can wish all you want. I called it, but I couldn't hit the button in time to execute it. And you could see it was a tremendous trade. And it was a very, very low-risk trade. And tomorrow I'm going to show you the way that I look for those low-risk entries. So we got this entry. This entry was an engulfer. This entry was an engulfer. And all you do is hit that button, sell on a down close. That will execute the entire trade for you. You don't have to chase the trade. It's all configured in the ATM and in the NDT. So you don't have to worry about running into your Superdome here and on the E-mini, getting that trade in. NDT does it for you. So you just hit sell or down close and you're in the trade. So these are the trades we look for. We look for those entries on engulfing candles. The step back is a dark cloud cover for a short, which I'll talk about we're going to talk about that at length tomorrow. And we're going to talk about our entries. So I'm going to go into much more detail. And tomorrow, hopefully we'll have another great day, and I'm going to show you the executions and my rationale. Now, I think hopefully you have some really good idea as to why we took these trades right now. I mean, these were nice falling channels. These are series of pivots with lower highs and lower lows, telling you that the bears are in control right here. We took it, we went after it twice, but we need more than that. That's important, but also that helps us define that we're not in chop. This is a lower high. Here's another pivot. It's a lower high. Here's another pivot. It's a lower high. Here's a lower low, and here's a lower low. So we know if we get sequential lower highs and lower lows, it's impossible to be chop because the bears are in control here. And when we get sequential higher lows and sequential higher highs, and in this particular case, now I want you to know that Ninja Trader has closed and opened. So it recalibrated our platform already. And all the fractal indicators get recalibrated a little bit. This had green order flow. The recalibration pushed us back to the right. So we were trading with order flow on a reversal, which is a very, very strong setup. And then up we went. Kabam. So what we're going to do tomorrow is we're going to go over how we assess all the independent variables on a given trade. And here's the key to day trading, and it's the key to success, and it's what makes also day trading difficult, and it's what most other trading methodologies and most other trading rooms will not talk to you about. Is that what they want to tell you is you can trade 20 minutes in the morning on one trade setup and make $250,000 a year. I mean, they want to feed you a bill of goods about how easy it is and how, and just, you know, don't worry about anything. Just take this one trade and just got 20 minutes and you'll make $250,000 a year. But it's not possible because I'm just going to put this up, and I put it up before, but all of the independent variables are non-linearly related. And what that means is, and this is the hardest part of day trading, is we know all the independent variables that are required to take a trade. We know that how far the candle body open is off support because we put an indicator up there. This is how far the candle body, that 4, is how far this candle body open is off the modified 15. We know the quant lines are really important. We want the correlative markets to be showing us that money is flowing in the direction of our trade. We want multi-time frame momentum and order flow. These are both independent variables, and we want these with us on a trend trade. As it was today, we took 3 reversals, and we're not usually going to get our indicators lining up, but indicators are market sentiment. And what we're doing is, when we call a reversal, is we're calling a trade based on market structure and price action ahead of the indicators. We're saying eventually everything is going to roll to the short side, but we're just taking the trade first. And the power of taking a reversal is that you get in at the beginning of a trend, but it's also a tougher trade to take. But all of these are independent variables, and then there are more, and we're going to go through every one of them tomorrow. But what the toughest thing to do is to assess which are the key ones on every given trade, because on every trade, they're not all equal. That's the toughest part. That's why discretionary trading is not easy. And to become a successful, professional, profitable day trader, you have to be able to make this assessment as to what are the key independent variables operational in your trading entries. And I'll just tell you right now, and I'll type it out. The 2 most important always are price action and market structure. And we're going to go over that a lot tomorrow. They govern everything. If you can't read price action and market structure, you cannot trade. If you're an indicator trader and you just take signals off of the indicators, you will never make money. I don't care what you're trading. You have to respect price action. You have to respect market structure. And what is market structure and price action? It's looking at the 50, the 15, and it's looking at support and resistance. We didn't take a trade this morning into a zone of rejection acting as support or a zone of rejection acting as resistance. That's one of the reasons we were so successful. We avoided them. Now, sometimes it's really annoying and it becomes a pain in the neck. But if you want to be profitable and successful, you only need 2 trades like this a day. I figure you need 6 or 7 trades a week to make $1,000 a week on a small account. Now, if you have a $5,000 trading account, you don't need an account that big, and you make $1,000 a week, that's a 20% return on investment per week. On a yearly basis, I don't know what the percentage is, but it's amazingly high. I mean, you're looking at a 5,000 or 10,000% return per year. In order to do that, you only need 5 to 7 perfect setups a week. So if a trade goes past you because it doesn't set up perfectly for you, don't ever worry about it. I mean, we had this move up, we couldn't catch it. We had this move down, we couldn't catch it. Who cares? We know that eventually the market gave us this great long, gave us the short, gave us the continuation, and we made just under $400. And we can do this again tomorrow. So those are the important things. I'm going to show you how to read price action. I'm going to show you how to read market structure. It takes work. I'm not going to tell you that it's easy. But that's the work. I mean, if you want to sit behind your computer in your home and make a living, it's tough to do. But listen, you're fighting the other commercial traders. And there's no reason why you can't be smarter than the other commercial traders. The only thing that you can't be smarter than is the other institutional traders. And it's not because they're smarter than you, but it's because they'll throw $1 million into a trade. And we can't beat them. They'll change the direction by banging out lots of 50. Bang, 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 bang. And I used to chase the tape. We have an indicator that actually shows you the tape. And what it does is it shows you executed lots, and you can dial in the lots you want. If you want to show lots of 25 or more, you'll see those. If you want to see lots of 50 or more, you'll see those. But and some traders do what's known as chase the tape. When they see the institutional traders banging through 50, 50, 50, 50, 100, 100 on crude, and the E-mini, they're banging 100, 200, 300, 400 lots. They'll chase the trade, but you're not going to make money. But those are the traders we want to trade with, because that's why we're looking at money flow, and that's why we're looking at market structure. And who determines market structure? It's the big traders. It's the big money. Who determines price action? It's the institutional traders. What we're doing is we're looking at what they're deciding, and we're trading with them. And there's no reason why we can't run over every other commercial trader out there. And 99% of the time, when we don't make money in a trading room, in this trading room on a given day, it's my fault. It's because I don't trade with the precision and the patience that I need to. It's very, very rarely the system's fault. And that's why I know that there's nobody in this room that can't be a profitable trader. You just have to have patience, and you have to have discipline. I'm telling you, the system will give it to you. We've been building it for almost 3.5 years. And one thing that our members do profit from is the fact that we've created amazingly better indicators, and we never ask you for any. I don't want to sell you now, because it's just not my job. I want our performance to sell you, and I want the indicators to sell you. But the fact of the matter is that we never charge you for add-ons and upgrades, and we are always making the system better. I will tell you when the multi-variable optimization of price action has reached perfection, and that is when every trade we take is a winner. That's when we've completed our goal. Because if you look at if you look at the prediction of price, and you look at it as independent variable A plus independent variable B, plus independent variable C, ad infinitum, is equal to some function f of x in which the solution f of x determines exact future price, then you have a perfectly optimized equation. That's our goal. But that goal isn't achievable. But that's our goal. And we made a major step forward when we added the market profile indicator, and we modified it with these zones. These zones are treacherous to trade into. So now what we've done is we've created nice areas to trade off of when we break a zone and retrace to it and get a continuation off of it. And we've created great areas to avoid. So we're moving towards optimizing this equation to give us a better and better and better result. And our goal is we never will reach it, so we're always striving to make the system better. Now you see crude starting to make a move, but we're not going to risk any more money again. See, it's 5,000 contracts. This is why this calculates it in contracts per minute. We can look at it. We can see exactly when the institutions move in. We're not going to take this trade simply because one of the things is to know when to stand down. But you can see how the institutions just pushed crude around like a baby at 5,000 contracts a minute. They just shot it up. Now, if we had a pullback to support, this pivot's broken, we're going to have a potential continuation long. But another important thing is just money management, to know when to stop. We only traded 6 contracts and made 350. That's a tremendous goal, and that mark, and that's what we're going to stop. Not because I'm concerned about taking another trade. Well, I am concerned because even a perfect entry doesn't necessarily guarantee you a winner. And that's because of the institutional guys. They could come in and push a wick through your trade, and then the trade can go 35 ticks in your direction. So every trade has associated risk. But if we were able to perfect this equation, we would come up with an entry that always won, always made money. And that's our goal, the continued optimization of this equation. And when we find what we think is a new independent variable, we always make an assessment, we put it in, just like that modified Heikin-Ashi formula. I thought that was a huge move forward, and it didn't work. And so that every single thing that we do look at is a key independent variable in taking the trade. And simply it simply requires us as discretionary traders to determine what are the most important independent variables operational. And you know what? There are going to be some times when every single independent variable is in our favor, and then that's when you should take the trade. If you can trade 4 contracts, you trade 4. If you can trade 6 contracts, you trade 6. You can trade 8 contracts, you trade 8. When every single independent variable that we assess on a trend trade, not a counter trend, is in our favor, this is when you throw the book at the trade. Because the risk on that trade, which is never zero, is so low, that's where you're going to really take it with a lot of contracts. You're going to throw your weight behind the high probability win. And that's really the overall, as a mantra, that's how you make money. And it really is risk avoidance. And then the last thing I'll say today, because we're going to go into this a lot in detail tomorrow, is it's never about the number of winners. It's always about the number of losers. Yesterday, what cost us the day yesterday was my bad risk assessment of that counter trend trade. I'll go back to it. It's right here. This was a trend trade, but we didn't have a red modified 15. It wasn't a bad trade. And I went over it last night. And it's got 8 ticks of selling pressure. So I think it's very reasonable to assume on the right edge we had no downside resistance except for this pivot way down here. Or I think we had the value area low. This was a zone right here, but we have plenty of space. But with the modified 15 yellow, this should have been a 2 contract trade. And if I made an appropriate risk assessment here, we would have lost 200. We would have had a profitable day yesterday. We wouldn't have made a huge amount of money. We would have made about $125. But you know what? That's not a terrible day. And adding to what we made today, we'd be pushing into 500 on 2 trading days. That's why it's really important to make a risk assessment here. We got terrific winners, but I misjudged and didn't take this appropriately. And we got some great winners. We got we got an 8-tick winner here. We got a $225 winner here. This was our higher risk trade. I took it with a small number of contracts. And this was a gorgeous trade. I wish I could have taken this with 5 or 10 contracts, only I'm not going to dial those in. There's not many people can take them. But this is where you have everything. The only thing you don't have is momentum. But you've got order flow, you've got 3 quants, you've got background bias, you're trading out of consolidation, you have market structure for you here. This is a dark cloud cover. This candle penetrates at least halfway into the previous candle. That shows selling conviction. It wasn't a huge trade, but we made nice money. So that's it for today. Tomorrow we're going to go into detail about putting together our successful trading platform and exactly what I look for. I'm going to show you how I got these 2 trades, and hopefully I can add to these 2 more winners tomorrow. So we are right under the $700 or $800 mark on 3 trading days. And tomorrow's the wild day. Because if we look at the Forex, if we look at Forex future, I have it right here. Tomorrow is crude inventory, Forex calendar. Wednesday, crude inventory at 10:30. That's going to send crude going wild. And we're going to wait till crude settles down, establishes a trend, and we're going to take a trade with 4 contracts on crude. And we're going to look to get a big winner on crude. Before inventory, we had somebody in the room a couple of weeks ago make a really smart comment, and that was the traders who are in crude prior to inventory are usually just the commercial traders. The institutional traders, the smart traders, they're waiting. They're waiting for the inventory report to come in, and then they're gonna throw their weight behind the trade. Now look at this trade on the E-mini. I'm sorry, on crude. We couldn't take this. We just couldn't get it because we had upside resistance, which it broke right here. We had the value area high here, and we were still inside that zone, and then we couldn't chase it. That's why we're only going to get 2 or 3 really perfect setups a day. And the fact that we couldn't get this move up is irrelevant. All that matters is that the trades that we take win. We're not going to be able to get into every winner, but the trades that we do take, we want to make sure are successful. That's the important thing. So there should never be any frustration about a big move in the market that we can't get into. What should be really frustrating is that the moves we take based on our rules don't work, and they do work. So that's the key. Not being able to get into this trade because we can't chase it through resistance. If we do, we're going to wind up going bankrupt. You see all the times that price bounces off support and resistance. The fact that it busted through upside resistance in this particular case doesn't give us a license to trade it into resistance the next time. We'll get killed on the trade. So we just have to be diligent. And my biggest problem, my personal biggest problem, is the loss of discipline when I'm down. Sometimes I will chase trades in low volume environments, and I'll get frustrated and take a risky trade on too many contracts. It's my own personality that I have to fight, and be very careful with that. And everyone's going to have those little personality nuances where they have to be really careful. You have to recognize them really early in your trading and work around them to be successful. And this is the one that you should never care about. If this trade does not give you an entry and you can't get it, do not care about it. Just care that when you do get the perfect setups, these 3, and the entry has a low probability of taking a loser, it's a low risk, high probability entry, it works based on our rules. That's all that matters. Not trades that don't materialize and move, because those are going to happen all the time because we trade with a lot of specificity. And I'll just say this real quickly. And I know that people in the room have heard me say this a lot. You can trade with specificity or sensitivity. If you trade with sensitivity, you're looking for all the true positives. That means you're looking to get into every winner. And if you trade with a lot of sensitivity, you're going to get crushed. If you think that you're going to get into every winning move in the market, if that's your trading methodology, the mindset that you have, you're going to go broke. What you need to do is trade with specificity. Specificity is the mindset that you're going to avoid every loser. If you trade with that mindset, then you're going to be profitable. You know, I've heard comments in the trading room in 3.5 years is that, you know, I have too many rules and too many inhibitions on trades. Too many winning moves or big moves go through and we can't get in them. And I don't come down on those traders because I'm not going to change their mind. You see, this move on the E-mini, we can't take it. The entry was into resistance, and we can't chase this trade. But we just got 3 awesome winning trades. One, if we could have ridden it all the way, would have gone for 6.5 points. That's a week for some trading platforms. 6.5 points. We just can't take this trade. If you do, it's a lot of risk. I mean, listen, there are things going for it. You've got 2 higher lows. You've got 2 higher highs. You can see inside the candle is a lot of buying conviction. You have triple quants here. And you have the rare alignment of order flow and momentum. This doesn't happen that often on a trading entry. So if you're going to anticipate a break of resistance, this is the time to do it. But just take it with 2 contracts and be very careful on this trade. Because we're trading with specificity. And what we're looking to avoid are all losers. That's the key. We're not looking to get into all winners. Although I have to tell you, this is a really juicy setup. If we were still hunting for winners, this might be a trade we would have considered. So this is all we're going to work on tomorrow. But I want to do it methodically. And I want to build from scratch for you to show you what's important, what's not important. So you're going to get a great feel for what we're looking for in trading. And if you just have the mindset right away that your goal is to avoid losers and not get into every winner, that's a big, you're now 1 step ahead of almost every other trader in the market. Because they're not looking for that. They're looking to get into every winner. And that's why 95% of traders fail. So listen, everyone, have a really, really great afternoon. Tomorrow we'll spend a lot of time on this. And look at the E-mini, man. It's really rocking. And I'll tell you, I do a lot of work at night looking at the talking heads because I'll show you really quickly. Let me see if I can bring it up. I mean, I don't do this often. This is my email. And what I do is I have really good data feeds. And it gives me a really nice insight into what the markets are doing. And I get alerts. And this is my personal email. And you can see we've got all alerts here. Futures, NBC News national correspondent, hearing President Trump will meet with China. These are all the alerts. Earnings guidance, Anthem, options trade, big cross. All of these, I look at these in the evening to give me an idea of where I think the market's going. And this helps me with my own options trades. Because just like we do in the market, we want to trade options with the institutional traders, with the big moves. So this is my Benzinga alert. I also have an options monster alert. I used to have Investor Observer alert, right? It's still here. I actually do have it. So I have multiple data feeds to help give me an idea. It doesn't help us in day trading, but it helps give us a general idea of where the market's moving and what we should, how we should position ourselves. Although, let me tell you, lately the talking heads have been so wrong. Everyone is looking for the market to roll over, and it just won't do it. We have 2 short positions in the options portfolio, the Qs, and we have Citibank, and we were up a lot of money, but we lost it. We're not down on the positions, but the market won't roll. But we have tons of long positions. That's a hedged portfolio. But I'm kind of digressing because I don't want to talk about options. That's another topic. And if you ever want to talk about that, I'll be happy to do that with you. But we just sold 1 profitable position. It was a short on Sientra, based on that data feed's news that their implant is associated with some rare form of cancer. The day that news came out, the stock went up, and our option was immediately underwater. But over the last week and a half, the stock has done nothing but take a dive. So it was only a 15-cent put purchase, and we closed it at 20 cents. So we made 33% on the option, and it just executed. I take every trade I recommend in the options portfolio, and so when I execute, I know everyone else did. So we're out of that position on Sientra. I'm also looking to close Finisar. We're up about 85% on Finisar. Finisar's up 32 cents today, and we're right at the price to sell, to close the position. And I'm gonna stop talking here, but we're looking to close Finisar at a $2.20 limit, and looking at Thinkorswim, it's at 213. We need 7 more cents on Finisar to cash out at about an 85% profit, and that's a big win because we bought it at about $1.40 something, and we're going to make over $1 per contract. So we just need a little bit of a bigger move up on Finisar, and we're going to ride it out. All right, listen, everyone, have a great day. The E-mini's rocking to the upside. We've got our nice profit. We missed one stellar trade due to my slow reflexes, but then we caught the 2 big ones on the way down. If I would have caught this move, we would have had 3. It, woulda, coulda, iffa. So it doesn't count. I'm not factoring it in. I did call it, but I couldn't get in it. So we don't put it in here. We made $350 today. We're going to make that grand this week. I'm very, very confident we will. We're just going to wait for our low-risk setups, and if we miss big moves, it doesn't matter. Our goal is specificity. Avoid the losers, and if we trade with that mindset, we're going to make money. So let's everybody have a wonderful. Rob, just if you could send us an email, we'll talk to you about it and give you an exact. Send us an email, info@rightlinetrading.com. Okay? Thank you, Rob. We just sold. We just bought our contracts on long gold, and gold is pulling back. So we're now long the 3X Direxion Gold. It's Direxion Daily Junior Gold Miners, JNUG. It pulled way back to $1.50. We waited and waited and waited. It's down 15% today. We just got into it. I think over the long haul, gold's going up. And we looked for a deep pullback to get in on the option. Now we have the June $7 call, and JNUG is at $6.50. This is a gigantic mover, and it's a very risky trade. And I told everyone in the room, everybody on the options, our options alert newsletter, this was a risky trade. We're either going to make a ton of money or we're going to lose the whole option. We're risking $150 here to make a potential $300. We're looking to close this out at over $4 because this is a very, very volatile position because it's 3 times. It's 3 times leveraged. If we get a 75% move up on the miners, we are going to get a monster move on this option. So that's it for today. Just give us an email, Rob, and we'll give you an answer. And I thank everybody for being in the room. Tomorrow you're going to get a really, really nice educational afternoon, and I'm going to show you how to build this, how to trade it, and what I look for on every trade. And again, I'm going to show you these entries. There's a little more to these entries than I can show you here because it's going to take a little bit of work. But you're going to see why these were so low risk and why this was such a low risk reversal. Okay, everybody, have a great afternoon, and we'll all be back here tomorrow morning. And let's beat this market up tomorrow. Let's make another 350 to 400 tomorrow. Take care. Have a great, great afternoon. Bye-bye, everyone.